Yeah, thank you very much. It's certainly my pleasure to be joining you with all of you on this session today. I hope you find it, get some good information out of this. But as already said, it's also important that if you have had experiences in applying this type of approach that I'm going to go through, or wish you had applied this type of approach, I'd like also to hear from you, as I think the value of these type of sessions is not just what I will talk about or the mentor talks about, but also your own experiences, which we can all learn from. Now, I've worked in both large corporates and the startup environment, and although I've enjoyed my time on the large corporate side, I think I, like so many others, and perhaps many of you, thrive most under the entrepreneurial spirit that exists in startups and smaller enterprises. And so as part of this, I'm also a charter member with TIE, a board member of the Business Angels Network of Southeast Asia, which is also known as BANSIA here in Singapore. And I get involved with a number of startups through my own venture, Klienschmidt. I'm American by birth, but I've been in Singapore and Asia for the past 11 years or so, and also spent 3 years working in London. So I've had the joy of having to work in many different countries, traveling around the world, and seeing practices both in the corporate and the startup environment across the world. So this approach that I'm going to go through is one that I personally take when I'm assessing potential companies to invest in, or when I'm mentoring new startups. And I really look for evidence that the founder has done sufficient investigation in each of the different areas which I'll cover, and that fundamentally there's no fatal flaws in the new business idea. Now, I think we all know that passion, conviction, things like tenacity, these are all traits that are very important for any entrepreneur. However, the very best entrepreneurs possess something even more valuable, and that is the willingness to wake up every morning and ask themselves, why will this business work when most will fail? And they ask this for a very simple reason. They understand the odds. They know that most business plans never raise money. They know most new ventures do fail. And also, they don't want to end up running what is really a lousy business, one that consumes years of energy and effort, ultimately really no go anywhere in the end. A vast majority of new ventures fail for opportunity-related reasons, market reasons. Perhaps the target market simply won't buy. Could be industry reasons. Perhaps it's too easy for competition to steal your emerging market. Or entrepreneurial team reasons. Perhaps the team just simply lacks what it takes to cope with all the different forces that really act on any new venture and try to bring it down to its knees. So what I want to share with you today is an effective approach to uncovering these flaws up front. And the whole point of doing this is to try to avoid impending disaster. Identifying a critical flaw in a new business idea, or one that you have just recently launched, can save weeks, months of time, not to mention a lot of money, which might have otherwise be wasted on a fundamentally flawed new idea. So if you can find a fatal flaw before writing your business plan or before it engulfs your new business, you can then deal with it in many ways. You can modify the idea, or simply abandon it altogether before it's too late. Now, I have to give credit where credit is due, and this approach I cover is based on a book called The New Business Role Test, which I highly recommend you pick up a copy of and take a read through. This was written by John Mullins, a professor at London Business School, who I've had the fortune to take a number of courses from when I attended LBS in the area of entrepreneurialism, and is very much a big reason why I ultimately got involved in the angel community, in mentoring startups, and in starting up my own ventures as well. So just as new car buyers take a road test before committing to buy a new vehicle, in the same way, this approach is really a road test on new opportunities that an entrepreneur may be considering. And by applying this road test, there's generally three outcomes. First of all, is possible outcome is the fatal flaw is uncovered, and the most likely response to this is, wow, I'm glad I didn't put too much time and effort into that business plan or that idea. And for those already in a new venture who reach this conclusion, this is a chance perhaps you can change the direction of the business before it's too late. The second possible outcome, you might find flaws, but they're not necessarily fatal flaws. They could be flaws that can be fixed by targeting a different market, by offering a different product or service, or even playing at a different level in the value chain, such as becoming a distributor rather than a manufacturer, or by adding skills to the team that were perhaps missing. And of course, a third potential outcome after doing this exercise is no fatal flaws are identified, and as you can imagine, this is the happiest, but probably the most rare outcome. Now, as the added plus of doing all this work in this process, it provides solid evidence-based research to help you now then build your business plan. So if you come up with the first outcome, you have to decide, do I abandon this or can I fix it somehow? If you come up with the other two, you can actually address this as you now start building your business plan, and you will be that much prepared when you're in front of investors or launching your new business. There are three crucial elements for successful entrepreneurship. Number one is markets, number two is industries, and number three is the entrepreneurial team. The 7 domains model, which is shown here, brings these elements together in a very clear, organized way to answer the crucial question, why will or won't this work? Now, at first glance, the model is really nothing new. I mean, it's what we probably all have seen in some form or fashion, and certainly understand about new ventures all along. But there are some key points this model really forces. First, that markets and industries are not the same things. Second, both the macro and micro level is important, assessed both independently as well as collectively. And it's very crucial that markets and industries must be examined at both levels. I will go into more detail later on. And then thirdly, reviewing the team is more than just about their character or their ability. As the model shows, it is comprised of 4 market and industry domains, both the macro and the micro levels, and 3 domains related to the team. Each of these domains are not equally important, and strength in certain domains can offset or mitigate weaknesses on good opportunities can be found in not so attractive markets and industries. That's ultimately a judgment you have to make, but this framework really helps you to segment the different strengths in each of the areas, as well as where perhaps the idea has some flaws, potentially fatal flaws. So this framework essentially answers, are the market and the industry attractive? Does the opportunity offer compelling customer benefits as well as a sustainable advantage over other solutions to the customer needs? And can the team deliver the results they seek and promise to others? So at this stage, I think it would be good to take a short break before I move on, just to see if any questions up to this stage or anything anybody might want to add in your own experiences related to what I've shown so far. While you're thinking about that, I can just share one experience specifically with GMS Mobility. This is a startup that I'm currently very hands-on at the moment, not just from an investor standpoint, but I'm playing a very strong operational role. As any startup knows, the more hands and support and of people to help you grow the business is certainly valuable. So GMS Mobility, the founder came to me and said, look, I'm a technical person, I'm a system consultant type person. Frankly, I don't have a lot of background in building a business, but I think I've got something that's a unique opportunity, and that's representing a software called Good, which allows BlackBerry-type messaging, secure messaging, and device management for iPhones and iPads and Android devices and Nokias, all these other phones, smartphones. And so, this came to me, a big part of what I did was to really sit down and look at the product, look at the market that it's fulfilling. A good one that we ultimately decided to go on was, let's focus on the banks and the insurance companies first. Let's go after that. But we also saw the big potential in a macro level market domain. And that was really attractive for us in terms of moving initially at a micro level in the banks, but then branching off into other domains, markets, which will grow the business as we go. So let's move into the market. This is where I'll start talking about market, industry, and so on. I'll cover a bit of that last question. First of all what is the difference between markets and industries? I think this is very important to understand. I often see it confused or mixed up. The two are mixed when doing analysis. A market consists of a group of current or potential customers having the willingness and ability to buy products, and thus markets consist of buyers, not products. I see that confused. And industry, on the other hand, consists of sellers that offer products that are similar and close substitutes for one another. So why is this distinction important? Because judgments about the attractiveness of the market one proposes to serve may be very different from the judgments about the industry in which one will compete. So looking at the market specifically, all else equal, we would all agree that most entrepreneurs and investors would prefer to serve attractive rather than unattractive markets. So the assessment of the market should be done both at the macro, broad market-wide level, and at the macro level, which is particular to a specific segment, and as I said, even down to specific customer level. Now, the macro level assessment is probably the most easiest area to assess of all that I've showed on that chart on the last slide, because of the large amount of data available to the internet. And what we're trying to is how large the market is, and this can be measured in many ways, and the more you can measure it, the better. And the more data you can find about the size, the better. You know, the number of customers, perhaps the money spent on a class of products, numbers of units purchased each year. These are all ways you can measure how large the market is. Another key answer to find here is the historical growth rate of the market, as well as any forecast about future growth rates. Is the market growing fast? Has it been growing fast? Will it continue to grow fast? And investors, both investors and entrepreneurs, all want to know the size and growth rate of the market, so that if the product is successful at the micro market level, there will be substantial upside growth potential at the macro level. The next key area to assess at the macro market level are the trends. These could be demographic trends, social trends, regulatory, natural trends. It all depends on what your product and business idea is, but you should understand understand what trends are considered, and whether these trends favor the opportunity, or will the entrepreneur have a hard battle going against certain trends. And one of the traits of the best entrepreneurs is the ability to assess, spot, and even perhaps create trends. I mean, the Apple iPad is a perfect example of a company, an established company, recognizing an opportunity to create their new trend, and you see the results. So the macro level market assessment is important to the entrepreneur because otherwise you risk investing years committed to a new venture that in the end may not be large enough for all the time and effort you've been putting into it. Now, it may be okay if you're just looking to run a lifestyle business, but not for entrepreneurs who really aspire for something much bigger. Now, moving to the micro level, this is probably the most difficult area to really invest your time in. But no matter how large or fast growing a market is, entering it is an absolutely critical barrier which must first be overcome, since customers are probably already satisfying their needs, though perhaps not optimally, in some way. So in this sense, there is no such thing as a new market in the customer terms. The entrepreneurial competition are really simply naive. I have heard that. And it's important, I think, that most successful entrepreneurs understand that even though they may be creating a new trend, they're understanding how they're addressing the customer's needs better than how the customer has been fulfilling these needs up until then. And now, again, going back to the iPad is not necessarily a new market. It's just it's fulfilling a customer need that they were fulfilling in another way, perhaps with laptops or the smartphone, but it wasn't quite the optimal solution. So they came out and developed a better way of addressing that same need that they've been having. So when you're assessing this segment, it's best by asking four key questions. First, is there a target market segment where we could initially focus on, in which we offer the customer clear and compelling benefits at a price that they are willing to pay? If yes, focusing on this market first will increase your odds of success at a faster pace, because you're going to see shorter sales cycles, you're going to see more a willingness to pay the price that you feel it's valued at, and more profitable, and so on. Second question is, are these benefits in the customer's minds different from and superior in some way? Differentiation is absolutely crucial. Third is, how large is the segment, and is it fast growing, specific to that micro market? And lastly, is it likely that entry into the segment will provide entry to other segments in the future? Is your initial success easily replicable into other markets? No doubt, the research at this micro level is much more difficult, and nothing beats getting out on the street and talking to prospective customers who represent the segments in question. Too often I see pitches by startups which clearly demonstrate a lack of getting out there and collecting first-hand data and feedback directly from potential clients. They often have very good detail about the macro level, because I can get a lot of that from the internet and other sources. But often I don't see enough information, enough evidence that comes from the micro level segment. Why is this? Well, perhaps because it's hard work. And perhaps another reason is you're often hearing things you don't really want to hear. You're getting feedback from customers. You're not always going to like what you hear. It does take a bit of a thick skin, I guess, to be able to take it on and use it, and use that information. Many make the mistake of only examining the macro level, but fail to identify the first customers who will buy, almost by name and why. And when I assess investments, I want to know how the new venture team will get their first few customers in detail. How will they reach them? That's your marketing. How will they engage them, which is your sales? how will they close the opportunity, which is essentially your value proposition, including pricing, and how they will deliver and support that customer, and that's your operations. Then I assess, is this process easily replicable so the business can scale quickly? So invest time and energy in this area. It will pay off big, either to identify any fatal flaws early, and this is probably where you're going to hear about some potential flaws at the micro level, or it's going to confirm the opportunity and potentially set up your first few customers. And those who ignore this really risk a dead-end venture on two counts. One is without differentiated benefits, most customers won't buy. And second, without a pathway to growth, most investors simply won't invest. So on the industry, this, same thing. Just as entrepreneurs prefer to serve attractive markets, they also prefer to compete in attractive industries, which most participants are successful and profitable rather than those where it's cutthroat and most firms struggle to survive. However, the reality is, as it turns out, most industries are simply not attractive. But by identifying problems in one area, you might be able to make decisions whether other factors in the market or in the team can outweigh the unattractiveness of the industry. The first step here, again, on the macro level is define your industry. Which industry is your new business going to be in? And this is not a trivial exercise because you can define the industry very broadly or very narrowly. If you define it too narrow, you may neglect close substitutes, which may not be considered direct competitors, but do offer the customer an alternative option. For example, Coca-Cola doesn't just compete against Pepsi. They also compete against the Starbucks and the juice manufacturers and so on. So the best approach in doing this assessment based on really looking at the macro level industry through Michael Porter's 5 forces analysis, which you probably all have seen at some stage. And this is really looking and defining what is the threat of other companies coming into your business or into your market. What is the buyer power? Are the buyers are negotiating? And what about the suppliers that are supplying you? And if buyer power is very strong, supplier power is very strong, and you're stuck in the middle, that can be quite a challenge. The fourth one is threat of substitutes. Are there other ways they can fulfill the same way in a much cheaper or easier way? And then, of course, how competition? How is it? Do people generally the competition? Is there enough business out there and everyone's getting their piece and not too hard against each other, or is it just all-out battle between the different competitors? An entrepreneur team which has direct industry experience is very helpful in conducting this assessment. Now, you might think that the macro level assessment is very sufficient, but the micro level assessment really helps to answer a very crucial question, and that is the differentiated benefit sustainable? Now, you might have a new idea or a new business, really very differentiated from what's done today. The micro will really help you to assess, can I sustain this in the face of competition, copying, and coming in later? So even if your micro level market confirms that customers are willing to buy on the market level, your venture will not grow if, in the face of competition, the differentiated benefits you offer cannot be sustained. And again, with GMS mobility and good technology, one of our big competitors is BlackBerry. And BlackBerry is struggling with all these other new phones coming in. So they're a fantastic solution, very secure. They were the leaders in this, very good name. But if they can't address the current challenges, their differentiation that they created is under threat of being sustained. So the goal of this assessment is to determine whether certain factors are present that would enhance the ability of your venture to sustain any advantage. Do you have any IP protection? And a second one is the presence of superior organizational processes, capabilities, or resources. A good example of this, of my own experiences, when I used to work for a company called Panduit. Panduit makes all the network cabling infrastructure for data centers and enterprise. And our biggest competitors were much larger companies like AT&T in the beginning, which later became Lucent and Avaya, and Tyco. Now, one of the reasons why we were able to eventually capture a large part of our market was because of our alliance relationship with companies like Cisco Systems, Rockwell Automation, Emerson Network Power. We built this over years and years and years to build this relationship, and it became very deep and very wide, not just at the sales engagement level or marketing engagement, but also the R&D development. We had our own people working within Cisco Systems full-time, designing our products alongside Cisco designing theirs. Now, competition, trying to replicate this, it would be a significant challenge. And up until I left them, simply could not do it. So these are ways you can actually create sustained advantage. Too often entrepreneurs, I think, fail to understand how long it will take to start making to close a sale. So no matter how good the opportunity takes. Again, with GMS Mobility, when we're all selling good, what we found is that we're often the first people in the door with this type of solution, which spurs the customer then to say, well, if you guys have a solution like this, there must be other companies that do as well. So, okay, we like what we see, but we have to go and check what else is out there for due diligence. And this then extends the sales cycle. Now, fortunately, because good technology and a good solution have very strong IP and a very, very strong selling proposition against what's out there, they generally do come back. But that sales cycle, what we originally thought would take maybe 3 to 6 months is extending up to 6 to 9 months. And lastly, but very important, is about the team. Assessing management involves more than judging the character and reading CVs. And there are often 3 domains to look at, as I showed earlier, relating to the entrepreneur or the entrepreneurial team. And I really think investors should also be considered as part of the team. First thing to ask is, does the opportunity fit the team's business mission, personal aspirations, and risk? There's one angel investor, he actually got full-time into a startup after talking with the founders, but realized the founders really weren't interested in building a big business. They were more interested about having a lifestyle business. And so, and of course, he thought, he was under the impression that they were really geared to growth, and he wanted to drive this as well. It became a conflict. He ultimately ended, and the business failed. So making sure that there's a fit on the aspirations is important. Second is the team capable? Do they have the experience, the industry connections, both up and down the value chain? Can they deliver on the critical success factors? So if the team needs to be strengthened to better suit a promising opportunity, it's better to do it before you write the business plan. I'm doing that right now, in fact, with a startup I'm working with, actually using this whole process. This startup that I've invested in the U.S., and now I'm helping them actually set up a venture here in Singapore to do that. Before we haven't even written a business plan yet. I've done the market research using my team. We went out there, talked to the customers firsthand, talked to the consumers, got their input, fed this back in a report, showing the strengths, the risks, all the issues that we'd have to consider. But in generally, we said, okay, yes, this is very favorable. Let's now get a team. We know what kind of team we need, so let's build that. Now, once we have that in place, we can talk about putting a business plan in place. And that's I think really shows where this can deliver. If I had found otherwise, I would have stopped and moved on and wouldn't have wasted any more time in putting a team in place, putting a big business plan in place, and then getting in front of investors to pitch the idea. So I do believe this process is one that can work, that can save you time if you find that that's not quite what I had thought, or it's going to help you put that business plan together quicker and faster, and hopefully with better evidence to demonstrate to the investors. So with that, that wraps up my session. At the end of the day, I think key takeaways from this is there is no easy way to do this. It is hard work, but I think all of us know in running businesses, if we've had experience running business, it's not easy work, very rewarding. Second is mere opinions about an opportunity does not work. Get out there, get the work done, get the opinions direct from potential customers, direct from channel partners, find out what the competition is really doing, and find out what they're doing well, what they're not. And this ultimately tells you very clearly whether you've got a winning opportunity or a fatally flawed one. Okay, so thank you for that. And of course, I guess what we'll do now is open up for any questions. And also, the purpose of Mentor Square is really lay out your questions on there as well, and especially if you have one specific to your own situation. And that's where those group of mentors from around different industries, I think, really can help you as a business owner.